They tell us debt is a burden, something nations fear, something economies must eventually pay back.
Ow.
But what if that's the biggest distraction in modern finance? Because behind every crisis, every bailout, every rising national debt number, there is a machine. A hidden mechanism quietly converting global debt into an endless stream of profit for a tiny group that never appears in election campaigns, never holds a press conference, and never loses money. Today, we're pulling back the curtain on the system designed to grow by keeping the world permanently in debt, setting the stage. To understand this machine, we need to go back far before today's headlines about inflation and collapsing currencies. Back to the early 20th century, when powerful bankers, economists, and governments sat together and built the first blueprint of a global financial order. They designed central banks, international lending groups, and reserve currencies. But behind the official story of stability and cooperation, something else was born. A system that made debt not a problem, but a product. And as we move forward, you'll see how every war, every boom, every crash played directly into the hands of this design. Origins, the birth of profit-driven debt. It began when governments realized they could spend more money than they had legally as long as someone was willing to lend it. Central banks stepped in as suppliers of this new money, created not from gold, not from production, but from debt itself, cause and effect. More debt gives more money created, gives more interest owed, gives more power for those who control issuance. From the very beginning, the system rewarded expansion, not repayment, because repayment ends profit, debt creates it. Rise the internationalization of debt by the mid-20th century. Institutions like the IMF, World Bank, and later global bond markets turned national debt into a global business. Countries borrowed, lenders profited, and rating agencies judged who lived and who collapsed. Every currency crisis, from Latin America to Asia, funneled more nations into the system. Governments fell, banks merged, and the machine grew stronger. The twist? The lenders never risked losing. Because even when nations defaulted, new loans were issued with stricter conditions. More debt, more control. Breaking point when debt became the world's oxygen. In 2008, the world saw the machine crack. But it didn't break. Banks failed, markets collapsed, but instantly. Governments borrowed trillions to save the very institutions that caused the crash. This was the moment the machine revealed its true power. The bigger the crisis gives, the more debt needed gives, the more profit extracted. Debt was no longer a tool. It was the lifeblood of the entire global economy. Fallout: a world that can't escape its own currency today. Global debt is over $300 trillion, more than triple the world's economic output. Every minute, nations pay millions in interest, not to citizens, not to governments, but to private bondholders, financial institutions, and central banking networks. Most countries now need debt just to pay interest on old debt. This isn't a malfunction. This is the machine working exactly as designed. Failed fixes why reforms keep making things worse. Politicians promise spending caps. Economists propose budget cuts. Global leaders talk about fiscal responsibility, but every attempted fix increases dependency. Austerity slows growth, gives requiring new loans. Currency crises weaken economies, gives requiring bailouts. Financial innovation creates new debt products, gives expanding the machine. Every solution fuels the same cycle, again and again. Modern parallels the pattern, repeats. Look around. Countries printing money faster than ever, record high inflation, eroding savings. Central banks raising rates while debt keeps rising, developing nations drowning in interest payments. Financial giants reporting record profits during crises. The machine hasn't changed. It is upgraded. The numbers reveal the truth. The world is more indebted, more dependent, and more controlled by lenders than at any moment in history. Conclusion: 3 takeaways. Debt isn't just a financial tool. It's the global system's primary product. Crises don't weaken the machine, they strengthen it. Those who create money control those who borrow it. And everyone borrows. Final warning: as long as debt remains the oxygen of the world economy, the cycle will only accelerate until one day the machine grows larger than the system meant to contain it. Call to action. If you want more videos exposing the hidden architecture of global finance, hit like, subscribe. And share this with someone who still believes national debt is just a number on a screen. The truth is much bigger, and we've only just started.